Should you wait until 2023 or even 2024 to purchase your home? Hey everyone, Clifford Phillip here. I'm a real estate agent, and if you're new to this channel is about everything real estate, investment, and even more ways to make passive income. For today's video, we have a loan originator that will answer our previous question and even more. Let's get to it. Thank you for joining us. We have Young Nakarado here with us. That's our loan originator. And this is the guy I go to as my personal deals, and also he helped my clients. Thank you, man.
No, appreciate you. Thank you for having me, man. It's a pleasure being here.
Yeah, so, let's start this. I have many questions from my clients.
Okay.
And one of them is, what is the difference between a loan officer and a loan originator?
Well, essentially, they're both the same thing. An originator, a loan officer, they both originate loans, they both sell mortgages, and they're both there to service the client and financing, whether it be your investment, your primary, your second home. Mm-hmm. They put you into the right spot and qualify you onto a specific product or a niche loan.
Right. So as you talk about loans, what are some loans out there that people could get qualified for?
Well, you have your normal loans, your qualified mortgage loans, what they call. You have your FHA, your VA, your USDA, your conventional. Those are the normal loans. Uh-huh. And then there's kind of like alternative doc loans is what we call them. There's a non-QM loans, and you have your bank statement loans, your DSCR, which stands for debt service coverage ratio. You have your profit and loss loans. There's a lot of, we can go on for hours on different types, but there's always a lot of programs, and a lot of products.
Yeah, I'm glad you say programs. Mm-hmm. First-time home buyers, there's always some programs out there mm-hmm. for them, but people don't really know how to get them. Yeah. I will have some links down below, but for the most part, what are some loans out there programs out there that people could?
Mainly, when you associate first-time home buyer, you're really going to say benefits. Mm-hmm. When you're a first-time home buyer, if you're going a conventional loan, you can go as low as 3% down payment.
Right.
The biggest misconception is that you have to put 20%.
Yeah, you don't
automatically.
need that.
You don't need to put 20%. Actually, 20%, nobody would buy a home, right?
Exactly.
Everybody has that cash laying around.
Exactly.
But you can actually put as low as 3%, 5% if you're not a first-time home buyer. So it's actually not even that bad if you're not a first-time home buyer. FHA, mm-hmm. those loans 3.5% down, you can put as low. As far as first-time home buyer programs, there are down payment assistance programs with the county, exactly. or certain banks offer some in-house. It kind of differs by lenders and exactly. by actual institutions, which have those programs.
So another question clients always have is the qualification. So most people always thinking, do I need credit? My income? Do I need both? Which one do I need to qualify?
So the biggest three important factors are mm-hmm. credit, income, and assets. Okay. Mm-hmm. You don't need perfect credit.
Right.
You don't need perfect income. Mm-hmm. And as I just said, you don't need all the assets. Right. You don't need 20% down to buy a property. You can buy as low as 3%. Credit, you can go as low as 580.
Exactly.
For an FHA loan,
mm-hmm.
or even 620 for conventional. So there's always options, but those three are the factors: uh-huh. credit, income, assets. So you have to be able to show your employment. Uh-huh. Your assets have to be seasoned in the bank, and as far as credit, it can be differentiated depending on which program we put you in.
Yeah, that's perfect, man. That sounds good. So this question actually came from a client of mine.
Okay.
She asked, should she wait until 2023 or 2024 to purchase a home?
So there's never a right time and there's never a wrong time. Mm-hmm. The time is when you are ready, mm-hmm. okay? If you love the house, if you have the assets to purchase, your credit's there, mm-hmm. it's a home that you can totally see yourself living in, yourself, your family, go for it. Throughout the life of the loan, you can refinance multiple times, mm-hmm. Okay, if you're letting a rate deter you, you're making a mistake. Okay, if you can afford a monthly payment, you'll be able to afford it when you're able to refinance as well, with a lower interest rate.
Right.
you know. But that same house, you're not going to be able to get that same house for that same price a year or two from now.
Mm-hmm.
You understand? Especially in this market in South Florida, where properties are appreciating in value year after year, even if it's not the same like we saw in the pandemic era, where 23, 25% year after year.
It's still going up.
It's still going up. So, you know, yes, we're going to see a correction in the market, but we're still going to see properties appreciate in value.
Exactly.
Yeah.
Well, thank you so much, man. I really appreciate this.
Appreciate you, man.
Appreciate you, man. So, thank you guys for watching.
And I appreciate you having me. It's an honor. It's really cool what you're doing here. You're really trying to get this information out to the public.
Exactly.
You know, and the most important thing is for us as licensed professionals is to really talk to the community, guide them, you know, and really give them the real information.
Exactly. This is Mr. Mr.
Knows-it-all.
Mr. Knows-it-all. Okay.